Is your portfolio positioned to profit from continued market volatility in 2019? Join over 100 investing and trading experts, including policy guru Steve Forbes, emerging markets icon Mark Mobius, America's best income investor Bruce Johnstone, elite energy analysis Stephen Schork, and trading visionary Tom Sosnoff at The Money Show Orlando to get the best ideas for protecting and growing your investment portfolio during 250 in-depth presentations. Claim your free pass now at orlandomoneyshow.com.
Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, February 1st, 2019 DecisionPoint show with your hosts, Carl and Aaron Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. All right, we got a jam-packed agenda today because we have the monthly charts to go over. I'm going to go through this agenda for you. So we'll look at the large caps, the small and mid caps, and we will cover, of course, the DecisionPoint indicators, the Swenlin trading oscillators, the ITBM and the ITVM. And then we will also, Carl's going to go over the big four with us, dollar, gold, oil, and bonds. And then we have some bonus material as well that my dad's brought. So we will go over those as well. So let's go ahead and get started with the DecisionPoint scoreboards. And of course, you can get these on the member homepage. Just click on DP signals in one of your tiles on there. So this is the wrong one. Thought I got the right one. My apologies. Anyway, what we're seeing, let me see if I can go find you a better one here. I don't know that I can. My bad. All right, well, let's go ahead and go back here to look at the signals on right now. I can tell you, I don't know why I have the wrong one here, but we did get a new intermediate term trend model buy signal on the Dow. We're seeing very close, like we're going to get there on these very close, but we're not quite there yet. I'll go over that. This is the big chart, really, I think, the sector scoreboard right now, because we got 5 new intermediate term trend model buy signals on 5 of the sectors. So pretty exciting stuff. I know you've been sending me all of these signals as I keep coming down, Dad. So the question, of course, will be right away. We're seeing these flip to buy signals in the intermediate term. What is this saying about a possible end to a bear market or the continuation of one?
I should mention that unless there's some substantial selling next week, we should get 2 more buy signals on technology and utilities.
Right. No. So, I mean, in the long term, we're still looking at defensive sectors that are holding buy signals. We haven't quite gotten there on these other sectors, but a lot of them, of course, they deteriorated very quickly to the downside. So it's taking a while for those 50-day EMAs to get back up to the 200-day EMAs. But yes, 5 new buy signals on our sector scoreboard. And interestingly, the ones that are also left, we still have consumer staples and utilities, intermediate term buy signals that haven't come in yet. And those are also defensive sectors. So interesting that those haven't managed to get their signals before some of these more aggressive sectors, I guess you could say. Although they're not on the highly aggressive side. That would be here with XLK. We did get the discretionary though as well. So, all right, so let's go ahead and look at some charts. Like I said, this is we had the month end yesterday. So all of those signals and charts went final. So we're going to give you a peek at all of those. I'm going to just start off right away with the daily chart for the S&P. Goodness, okay, hang on. I keep losing my arrow. All right. In any case, here we go. There it is. All right. So here we go with our S&P 500 chart. And we're going to look at Dad brought one in that's really, really interesting. So we're going to look at that at the end. But one of the things that I noticed, remember we had an ascending wedge going on here. When you use this low back here in December and draw your rising bottoms trend line, it still technically is there. But as we talked before the program, I think that this is definitely a more accurate rising bottoms trend line. And consequently, that puts us in a rising trend channel now. And we have broken above not only the declining tops trend line, but also the 200-day EMA. Something to keep in mind, though, our PMO buy signal right now is on the overbought side for a bear market situation. All right, we'll go right in.
You mentioned that the SPY, which was what we used to publish signals in my blog.
Yes.
It went to an immediate term buy today.
Oh, okay. Yeah, our scoreboards, we use the S&P 500 in case you are confused out there. And but the signals that we do turn in to Timer Digest are based on the SPY chart. So yes, that one did come in. So I would expect to see, I was expecting it to come in today, but the 20 just couldn't quite get there above the 50-day EMA. All right, weekly and monthly here. And then I'm going to show you the Dow chart. So again, on the weekly chart, we were already seeing the PMO bottoming, but now you can see that pop right there above that declining tops trend line. So that is something we're watching pretty closely right now, because if we get to, a really good move to the upside, that could be signaling that this is coming to a close as far as the bear market goes. But we still have some ground to make up. Now with the monthly chart, this is why I still am in bear mode as far as the longer term, because we have that PMO sell signal. And again, I've gone over this a bunch of times, but we've only had about 21 sell signals in 90 years. And we got one at the end of November. So for me, I will be watching. We are seeing a little deceleration here, but for me, I want to see a bottom before I can get really, truly into bull market mode, that this is over. And you can see when we start getting those turns, that's about the right time. We may miss out on a little bit of the move to the upside, but that I think is a better indication than waiting for the buy signal. That's when I'll start to consider this as a bull market situation. But currently, because of this monthly chart, personally, I can't get out of bear market mode. Here's the Dow daily chart. Here's that intermediate term trend model buy signal that came in, 20 crossed above the 50. We can see that the Dow popped up above that declining tops trend line, but it ended up closing just about on it. We'll have to see if we can get it to break out next week. And the PMO is still rising, and it is getting overbought again for a bear market. Granted, normally we see between a 2 and a -2 oscillation as far as the indexes go. So you might look at it and think, well, it's not overbought. But when you're in a bear market situation, you're near these tops that we had previously, that would be considered overbought. And let's look at the weekly chart, and then I'll peruse very quickly through the NASDAQ, and we'll look at some of our signals. So here we go with the Dow weekly chart, and it looks very similar. We've got the PMO turning up, but here you can see, unlike the S&P, we don't have that breakout above the declining tops. And I had also marked this rising bottoms trend line, and where these two cross is where we're at right now. And my sense was that this is going to be too much overhead resistance, that we'll see it turn back down. But we did see the S&P pop above that, so we'll have to see. But I would look for a downturn at this point. All right, the monthly chart, there's that sell signal still in play for the Dow. Looks very similar to what we're seeing on the S&P charts. NASDAQ daily chart. Rising bottoms I have annotated here. I could probably move this, and I think we would be looking at another rising trend channel. And you know, as Carl and I were talking before the show, the ascending wedges, just based on how we get, you know, the price movement will a lot of times turn into a rising trend channel, because you don't always get the breakdowns on patterns. You don't always get the breakouts that you expect on patterns. So they tend to morph a little bit. And in this case, I think we are starting to morph into rising trend channels. There is the 20 and the 50, not quite a positive crossover, but I would expect to see it next week. The weekly chart. There we go. Now you can see with the NASDAQ, we have a much better breakout from the declining tops trend line, but we also have a much steeper declining tops trend line here. So I think the NASDAQ had a little bit more, a better opportunity to have that breakout just because that of the steep declining tops trend line. But I think it's very interesting to note that on this weekly chart, trading occurred on the NASDAQ 100 pretty much above that declining tops trend line all week long. The week before, pretty much the same thing. I think these lows, that low dropped just below the declining tops there. But right now, we're getting that breakout. And you can also see it's above the 43-week EMA as well. Monthly. Again, you're going to see the same stuff. We've got a PMO sell signal. This came in at the end of November as well. Not as much deceleration, though, I would say, on the monthly chart for the NASDAQ 100, which I find kind of interesting. And I think I'll just look at the monthly chart for the OAX because it doesn't look too much different. And there you go. There's that PMO sell signal still in play. Tiny bit of deceleration, but not too much at this point. And you can see trading, that's for today. So don't get confused. That little bar right there is February 1st only. The other one right here is the one we're paying attention to. All right, I'm going to take a peek at those indicators. I'm going to pass it to you, Dad, so you can go over the big four, and then we'll cover those bonus charts that you brought. So right now, looking at the very short-term indicators, our climactic indicators, what I want you to know and recognize right off is the Bollinger Band is starting to be punctured right now on the top side here. That means we're getting very low readings. We invert our VIX because to us, very low readings means overbought. It means bullish sentiment, a lot of bullishness, and that typically is when you're going to get that turnaround, being that sentiment is contrarian. One interesting thing, I noticed that we did pull back a little today on the new highs, but we've been rising all the way up here as we've been going on this move to the upside. I think it's interesting today, though, we didn't really see any climactic readings on the net AD, the breadth and the volume on the net AD. So, you know, I see it pulling back. I don't see this as being a whole lot of information right now. This is really the important part of this chart right here. And short-term indicators, they are in a declining trend. Today they turned down. I was looking at this earlier today and they were still rising. So with today's action, and we had a little bit of a positive move here, the short-term oscillators turned down. So I think that could be an indication that we should expect some downside next week. And intermediate term indicators, they're still rising. They are quite overbought. I would say extremely overbought, especially for what we're looking at as far as a bear market would be concerned. I mean, we're looking at tops that we've had. Actually, we've got a top that's even higher than the tops we had during that rally move before. So we are very overbought on these intermediate term indicators. I would say now we're very vulnerable to them turning down. And that would mean, well, could mean that we'd be looking at a lot more downside in the intermediate term, but we haven't turned them over yet, but it looks like they're getting ready to. We're getting some deceleration. You could see in the thumbnail better than here, that curve, the curvature as it's trying to decelerate and turn back down. Okay, let's go ahead and look at the big four. And away we go.
Okay, the dollar's looking weak, and notice the PMO has topped, crossed through that signal line and then back down. So to me, it looks like we're probably going to get some continued downside on the UUP. Next.
Yep, top below the zero line too. Don't like to see that. There we are.
Okay, again, we see a rising wedge pattern that broke down. We've got the weekly PMOs crossed down through the signal line. topped, and so I'd say, again, this points to more downside on the dollar, which would be good for gold.
Absolutely. And if the market's going to turn down, that'll probably encourage some movement into gold as well.
Okay, here is another chart that's not looking too good for the dollar. You notice the monthly PMO, it's had 2 months in a row with the same reading. So that is, it's leveling off. It qualifies as a top, as far as I'm concerned, when you get 2 in a row like that. But so long term, it doesn't look so hot.
Yep, looks like a test coming up down here. Alrighty, gold.
Okay, gold's finally come alive.
Yes.
And I guess it's this last week it broke up that time, but we've gone through some pretty long-term resistance, and now they're pulling back to it. Notice that the daily PMO is turned up and is above the signal line.
What do you think about, is it as far as being overbought? How would this?
Well, from what we see, within a year, it is overbought, but I think we've got a long way to go upside. I'm not worried about the PMO being overbought at this point.
Okay. Anticipating questions out there.
Okay. Okay, the weekly looks even better. And we've got the rising PMO. It's above the zero line, above the signal line. And gold is looking better than it has in a long time. We've got long-term resistance right above. It's in the trading range we've had for about 5 years. There's at 1375. That's the next big obstacle that it needs to overcome.
All right.
Incidentally, the monthly charts that I'm using, I have them set to January 31st.
That way we don't have to worry about that.
No, we don't have to worry about it. So this is just cleaner. The again, we see that 5-year trading range, and for the second time it bottomed in the middle of that trading range, or well above the bottom. So I've got some hope. It's tested it like 3 times since 2016. So maybe this will be the third time, or the fourth time being charmed.
Yes.
PMO's rising, that's good.
Yeah, I think it's looking pretty good as well. Okay. All right, oil.
We had the rising flag, and we got a outlier down tick on Monday, but I'm just sticking with the rising flag. It's not horribly bullish, but it's a weak pattern to me. It's much preferred to have the flag pulling back and then it's like building compression to go higher. But overall, this still looking bullish to me.
Yes. Yeah, I'm looking for a breakout. I was looking at my chart as well. Alrighty. Monthly, weekly.
Okay, we've got both crude oil and USO, just to get an idea of when we hear quotes on crude on the TV. And what we have here, it looks like, is reverse head and shoulders patterns. Positive PMOs turned up. And I think that the correction, I think it was down 40%. I think that's done for, and I think it'll be heading higher. I don't have a sense of long term whether it'll get out of that trading range, above like 76 for crude. But I think it's got a good chance of going higher within the range for now.
Mm-hmm. And monthly.
This is the week. I'm sorry, the monthly PMO is decelerated substantially, and I think it's about ready to turn up. But certainly, it's a negative right now. But I think it's showing me it's showing strength.
Yep. Alrighty. Yeah, you can definitely see that deceleration going on there. Alrighty. Bonds, TLT.
You know, another wonderful, fun week. Goes gaps up and then goes back and fills the gap today. I'm paying more attention to the horizontal support at about 119.5. But there is a rising trend line to be looking at. Notice how the whipsaw the last 2 days. We've got the daily PMO turned up and then turned back down again today. Mm-hmm. So it's looking kind of like a head and shoulders pattern up there. Not the cleanest I've ever seen, but I think that kind of dynamic is present there.
Yep. Okay. Weekly.
Okay, more of the same. It's still positive. Weekly PMO is still rising, and there is this chance that we'll see it go to the top of that trading range anyway. But I'm not too sold on either way right now.
Mm-hmm. Agreed. This was something Tom and I actually agreed on. I think it was Thursday. We never agree, but we actually both came in bearish on bonds, and of course the audience was they were actually very bullish, so it was very interesting.
So here we've got the monthly on USB. It's broken a rising trend line. It also, first of all, bounced off of that is a 34 or 35-year rising trend line. And I'm not sure it's going to go all the way there to the top, but right now it's looking kind of positive in this time frame. And the monthly PMO is turned up. So.
Yep. That'll be really interesting if we get a breakdown from this. That's a really long-term rising trend.
Yes.
All right, I guess it's bonus time.
Let's
do it. All right.
This week was kind of interesting. Well, last Friday it had gapped up. SPY had gapped up, and then on Monday it gapped down and tested that support line. And when it finally turned back up, it was still a down gap, but it closed in the top of the daily range. And when I saw that, I said, "Uh-oh," to myself, because I was looking for a bearish outcome for it to break down, but it never did. And I thought, well, this is showing way too much strength, and probably going to go higher out of that, and it certainly did. So we got a breakout, and of course the new 2050 crossover for a buy signal. Now, you might wonder why I came up with that particular support line, or resistance line. First of all, the October and December lows were passed through. I mean, there was no resistance there, so I thought, there maybe is some resistance higher. And it happens in the middle of November, that low it hit was right there. I drew the support line, the resistance line through that close. And as it turns out, it looks like really a very good guesstimate of where that support resistance was. Now, Aaron, I'll change it to a line chart and we'll demonstrate.
update there.
Okay, there you go. The closes, and even and for the top and the bottom of the range, turns out an excellent choice.
Yes.
And
Alrighty.
so the lesson is that if you're having trouble finding the range with the bars, go to your line chart and see if you can see something a little more sensible there.
Yeah, and I like it for chart patterns too. It's a great way to make, confirm that what you're seeing is probably what it is. All right, this is the very, it's busy, lots of information. Let's do
lots
this.
of going on in this chart. Of course, we've got the breakout, we've got the 2050 crossover, and that's the positive side. More than negative would be PMOs overbought. On balance volume, there's a reverse divergence. Notice that the top, that's the wrong, I got the wrong line in the wrong place. It should be across the first top in October, but that's okay.
Yeah.
Basically, what we have is we've got OBV equaling its prior top in December, and whereas the price is still not anywhere near equaling that December top. So what it is it's basically, imagine you've got all this volume coming into the market on the upside, and yet it can't get the price moved.
Yeah, all the way up.
As much as the volume line.
Okay.
The volume, I always track the S&P volume because it's SPY volume is for that trading instrument. S&P volume is for the index, and you notice there's quite a difference. On Thursday we had a very climactic reading, and today it's still above the 1-year average, whereas there's nothing, it doesn't compare on the SPY volume. So anyway, this could be climactic volume, meaning it's a blow-off top, or it could be just more volume coming into the market to backing up that breakout. We'll know next week, I think, for sure what it is, but it's a little bit, the volume's a little too high for me. But it being a healthy surge of volume coming in for the breakout.
Yep.
Then, of course, we've got the overbought VIX. When it hits that top Bollinger Band, it tends to turn back down. Not necessarily horribly, but it's a place where you could expect a pullback to occur in a couple of days. Start.
Yep. That's what I'd be looking for. I know we've both been watching that too to see if it can
Right.
get up there.
I've been waiting for that to happen.
I know, right? Okay, 1 minute, and here's our last one. We talked about this one last week, but I think it is good.
I'm not sure if I made the point last week, but the New York Stock Exchange was in a bear market from January of last year. And where most of the bit broad indexes didn't start their bear markets until September, October-ish. That I think in terms of guesstimating how long the bear market lasted, this is one measuring stick you could use. This has it lasting a year, which gives us some encouragement as to whether it's going to continue to rally and make new all-time highs.
Excellent. Well, this has been great, as always, to have you here. I do want to thank everybody out there for being with us today. Please remember to complete the survey as you do exit. We love to get your feedback to hear what you think of the Decision Point show. And I know Carl is joined onto the team every Friday, so he'd love to hear what you think. As a quick reminder, Decision Point airs Fridays at 4:30 p.m. Eastern Time. Have a great weekend, everyone, and we will see you back here, hopefully, next Friday. Happy trading.